What's good, everyone? This is Dr. Nii Darko. Make sure you hit the subscribe button below so that you're always up to date on the new uploads as well as alerts on this show. The other thing that you can do to help build this community is make sure you leave a comment below. Let us know what you like, what you don't like about the show, and ultimately, let us know who's winning these arguments, because I need to know that I'm beating Renee in these debates. Run the tape.
Now, you mentioned also, people coming to you in their 40s, 50s. We've talked about having even neurological dysfunctions, maybe even Alzheimer's or dementia. And I wanted to kind of pivot, we're talking about disability, but what about when your disability now turns into something that is much more long-term, and you're needing actually care at home?
Mm-hmm.
Let's talk a little bit about long-term care insurance, because I know that your company, that Set for Life Insurance, does provide some services with long-term care insurance.
Yeah. So long-term care insurance is sort of a sister product to disability insurance. So the way I look at it is disability insurance covers your working years. When you're relying on your income, you insure your income. So I have a lot of clients that are kind of in that transition period where they're in their 50s and they're kind of letting go. Maybe they're getting ready to retire. But now we're looking at it going, now what's your biggest risk? You saved for retirement, you paid off all your debt, you have this big nest egg. Your biggest risk is becoming, having, like you mentioned, dementia, Alzheimer's, or some kind of long-term healthcare issue, and it can wipe out those finances. So statistically, 70% of people will have some kind of long-term care need at some point in their life, whether it's nursing home health care, something like that. So a lot of our clients, as they kind of let go of their disability, we're starting to look at long-term care insurance to cover that risk. So that way you don't deplete all of your retirement assets that you worked your whole life to save for. And then on the another thing too, is we have a lot of clients whose parents are also, maybe they're in their 70s, 80s, and they're looking at it going, there's our inheritance. Something happens to mom and dad, we're the ones in charge for paying for all of that care. So a lot of the times the siblings all get together and they buy a policy on their parents, so that way they can outsource that risk. So something happens,
right,
that risk is covered. Long-term care will pay for all of those needs, and their estate is preserved.
Yeah, I think long-term care, and when we talk about long-term care insurance, it just reminds me of a conversation that we had on the podcast not too long ago, where we talked about the Medicaid trusts and things like that. And so sometimes you have nursing home needs for your parents or for yourself. And in order to be able to get that help that you need from the government, you often have to put up your assets. And are people using long-term care insurance to be able to kind of buffer or protect them from having to do that, to basically give up their assets? Like you said, there goes our inheritance. There's the house that we thought that we were going to live in or to be able to rent.
Yeah.
Talk to us about kind of the implications of not necessarily having long-term care insurance.
So what you were talking about is Medicaid. In order to qualify for Medicaid, you have to really wipe out that whole estate, and the assets have to be minimal, like really, really minimal. So that's really not ideal. I mean, you don't want to wipe out all of the assets to be able to do that. So with long-term care, but still, even if your family or your parents still have some assets, it is important to make sure they're covered with long-term care. So I just looked it up this morning. In Colorado, where I live, the average cost of long-term care is $86,000 a year. In New York, it's $100,000 a year.
Yeah.
The average stay
is expensive.
Yeah, the average stay is 3.5 years. So if you have mom and dad and they're in New York, you're talking almost $1 million claim right there, just like that. And so that's a lot of life savings, just to, as opposed to paying for a policy that'll offset that risk. Now, Nii, you had also asked about the tax write-off for disability, something very interesting for long-term care. It's the only type of insurance that you can pay for through a business and deduct the taxes or deduct the premiums from your taxes, and the benefits are still tax-free. So that's something really interesting. So If you're a locum and maybe in your 50s and you're kind of thinking, maybe I'm kind of aging out of the disability, but gosh, if, I'm rock climbing, I'm doing all these things and something happens, you can maybe pay those premiums through your LLC or through your own business and do something like that. There's also policies that you can just pay for 10 years and you're done and you don't have to pay for them the rest of your life. And that way, by the time you retire, you know that you're going to be insured well.
That's definitely
that is really good to know.
Idea. Yeah.
Long term, you and I had a discussion, Jamie, offline about just kind of long-term care insurance, being in the sandwich generation where you're taking care of your children, but you also could be taking care of your parents. I think that there are quite a number of maybe not so much medical students, but maybe residents who might fall into that, into that particular situation. What is the cost of your average long-term care insurance plan, considering that they're not really making that much money?
It really, really, again, it always depends. But one of the things that you also mentioned, you have residents, chances are they're not even living in the same place as their parents.
Right.
So if something happens, they really literally can't take care of their parents. Whereas hopefully you're living in the same place as your kids to take care of your kids. But if you're sandwiched in and your parents on another coast or something, it's really tough. So the cost has so many different variables. It depends on your age. There's also discounts if you're married. There's discounts if you're healthy. Depends on how much you want to pay for do you want to have different riders on the policy? But just for an example, like I had a client of mine, he's 50 and he's in that period where he's thinking about transitioning out. For him, it's like $150 a month for just sort of a starter plan and just to have that. If he wanted to have the 10 pay plan, it was like $6,000 a year, but in 10 years, he's paid up. He could do it. He's a locum physician. The older you are, the more expensive it is. If you wait until you're 70 or 80 to buy a policy, it's very expensive. You could be $1,000 a month or something very, very expensive. It really, again, it just depends. And sometimes you don't cover the whole risk. You just say, we're just going to cover a portion of it. We can't afford the full amount, but the kids are going to just chip in and get some for mom and dad. Yeah.
This is actually a big deal because I know it's being brought up in the political scheme or political
scheme
right now. I'm from Ghana, but scheme, whichever way you want to look at it.
It's in the conversation. And if you look at the demographics, the population's aging. And so the younger generation are not having kids and the population's aging. I read something, I think by the year, don't quote me on it, in about 20 to 30 years, 1 in 3 people will be over the age of 60. Like it's really skewing there. And so what is that going to do to the long-term care community, the nursing homes and the cost of the care and everything? So we're entering some uncharted waters in this. And this is not covered by Medicare, maybe Medicaid, like you said, if you deplete all your assets. So, and there's been a lot of changes in the marketplace. So companies have come in, come out, they're not having priced it right. So there's still some shifting around that's happening.
Yeah. Well, listen, so if folks want to get in touch with you afterwards, they want to continue this conversation. They're like, look, that's the person who has a heart of a teacher. I want to talk with her. How do they get in contact with you?
The best way is just to go to our website, setforlifeinsurance.com. Our contact information's in there. We have a calendar link if you want to set up a time. We have a request a quote if you want to request quotes. If you already have insurance, like you did when you came to me, I'm happy to review that too. Sometimes I say you should replace it. Sometimes I say you shouldn't. I'm very straightforward and I always look at the best interest in the clients.
Yeah, we're going to have that link in the show notes down below for those of you who are, really interested in either disability insurance or long-term care insurance or life insurance, because you do life insurance as well.
We do a lot of term life insurance. Yes.
Yeah.
You guys heard that term.
Term life, not whole life.
Yeah. But I think there's it's always available. That's whole life is always, you guys do whole life, right? If it's necessary.
Not very much.
Needed.
In very extenuating types of circumstances. My philosophy is you want life insurance. You want as much as you can get and pay as little as possible until you're able to self-fund. maybe the kids are out of the house or you paid off everything and you really don't need it anymore. That's the goal for term life insurance. You want to cover it while you're vulnerable and not overspend for it.
Right.
There it is. Boom. Hey, Jamie, thank you for coming on the show and kind of schooling us on things that obviously we didn't go to school for, but we really appreciate it. And we also appreciate the partnership that you've had with Docs Outside the Box for all these years. And for the folks that are listening, listen, we have worked with Jamie for close to 10 years now.
Yeah.
And, we are very happy with this relationship and has moved on into this podcast. And I do believe that you want to work with people who have a heart of a teacher. You want to work with people who have your best interest in heart. And depending on where she is, she might be up here or here. Jamie definitely has it. So make sure you guys check it out. Don't be afraid to even just start the conversation, even if you're just a resident. Okay. It can never be too early. Just have the conversation. Yeah. And obviously, if you're a young attending and you've left residency and you're wanting to know, just, pick up the phone or send an email and have that conversation.
Yeah. Well, thank you guys. I've really, truly enjoyed being on the podcast and getting to know you over the years and seeing the pictures of your kids over the years. They are just adorable. And hearing their stories as well. So thank you so much for having me on.
Thanks so much, Jamie.